Finance. Barry McGuire here for Barry. Donna, why are you laughing at me?
Just go.
Donna brought me in live unexpectedly. It's the Monday main event, 5 p.m. Mountain Time. Barry McGuire's Creative Real Estate Education Group. We meet up every Monday to talk about anything related to creative real estate. That can mean, like it means today, financing. With Shaune and Keaton Kirkwood, both Ace mortgage brokers. Sometimes we have appraisers on, developers, lawyers, foreclosure lawyers, accountants to tell us about tax. I mean, we try and cover the waterfront in terms of what's going on with investment real estate. Creative real estate, especially last week, we had our focus group on, and we just were really talking about, what had gone on over the last couple of months. What were they seeing where they operate? What was the market like? What kind of deals were they seeing? That was really, really interesting to hear it from their perspective. And of course, most of the focus groups here in Alberta, so it was more of an Alberta perspective. But I thought it was really, really useful. Calgary is on fire, to say the least. One really telling statistic from last week was, I think that it's busier now than it was in that furious lead up to the 08 crash, 06, 07. It was incredibly busy, but it's even busier now. There are fewer listings than there were then, and prices are going up steadily in Calgary. So that was really interesting to hear. Other things we do are focus workshops. We gather people together in a room and do 1 day or 2 day events that talk about various creative strategies like agreements for sale or rent to own, options, fix and flip, joint ventures, wholesaling, that sort of thing. We've done 3 already this year. Nothing planned for the future. It's a matter of demand. If you're demanding we do more live focus workshops, then you just tell Donna and we'll get it organized as soon as we have enough people. We also have great home study kits that are the product of those focus workshops. So that's kind of a rundown on what's happening. We've taken a month off, probably about 5 weeks off, August and a week of September. And so we're getting back at it with the focus team last week. And this week, we're going to bring in Shaune now and Keaton Kirkwood, and we're going to talk about financing. Both of these fine gentlemen are mortgage brokers. Both of them operate or live in the Edmonton area, neither in Edmonton, but they don't just work in Edmonton. They can help people other places then. And as we get started, Shaune, why don't we start with you? I want people to know if they're in Newfoundland or St. John or Oshawa or Winnipeg. I mean, can you help them if they live there, if they need a mortgage?
Well, I can help everybody across Canada except Quebec. So, licensed in Alberta, but our company has agents licensed in every single province. So,
good.
You can do it anywhere, and I can make use of my stress ball. I get these tough files. So,
well, that's
creative stuff.
That's very creative. That's good to know, because as you chaps have seen from being on other times, we do have people from all across the country that tune into this webinar. Keaton, what about you? Are you a more than Alberta guy, or do you kind of stick to Alberta?
No, I'm licensed BC and Alberta. So those
BC
are the two provinces we're licensed to operate in, but then we can also say through the same method as Shaune work through our brokerage elsewhere. So
yeah,
primarily Western Canada.
Okay. Well, that's why it's good to have a team. And not just be limited to one spot. Now, that's interestingly enough, on the legal side of things, it used to be very difficult to practice law in other provinces. You had to go through being admitted to the bar, maybe just for one appearance, or if you wanted to practice regularly. It's quite quite a rigmarole you have to go to. It's a lot easier now, but I stick to Alberta because the subtleties on the legal side are, you don't know what you don't know. So I guess I have my own network of agents that are other lawyers in other provinces. And if people need help, I refer them to a different lawyer. Not part of my company, though. All right. Well, I'd like to hear from you guys about what is your sense of the market, not just what's going on on the finance side of things, but I'm pretty sure that because you're helping people get mortgages to buy properties, I mean, that means that you've got likely that you've got a sense of what the market is doing and has been doing. And so, Shaune, let's start with you. What has the summer brought you in terms of where the market is going, in your opinion? And then you can, tailor it to Alberta if you like, or you make general comments because, Bank of Canada and all that stuff. So let's hear it from your perspective, Shaune.
Well, contrary to some people's belief, the real estate market is not just Vancouver and Toronto. So our market here has been busy. I'm seeing more private sales than I've seen in the past. So I think investors are looking to get a deal and take the realtor out of the equation to save maybe both of them some money by meeting in the middle someplace, and $15,000 in realtor fees is maybe split between them. Say it's been busy for me. People are buying owner occupied. Generally, when they're doing that, they're looking for something with a suite to help out not only the qualification, but to help pay the mortgage down. You get a $1,200 in a basement suite, and your mortgage is $2,500 a month. That makes a big difference in your
Sure.
pocketbook. So you can
So
save
more
that.
of that.
If you can afford it, you can save that money up and maybe put it towards maybe the purchase of the next one. So lenders have been generally pretty good on my side as far as approving clients who are solid files. Insured deals are pretty easy to get through these days if get the clients trained up and clean up their credit a little bit sometimes. So it's hard to put 20% down on properties these days. So if you're doing a rental property and you need that 20% down, there's creative ways. You maybe got to have a partner or something like that to do it, or what you've been saving up. It takes a long time to save up $60,000 or $70,000, $80,000 for that 20% down payment. So
a lot of money.
But like I say, Calgary is just nuts. There's less inventory in Calgary than there is in Edmonton, and things are going into multiple offers. And on the ones files I've looked down there, pre-approved people, and they say, "Oh, geez, I put another offer and it was rejected. Someone went 50 over list or something like that, and it wasn't worth that." Or so they're having a hard time getting their foot in the door. So, and of course, it's investment property. It's got to make sense, right? The emotions got to go out of it, and
Sure,
you got to make sure it's going to cash flow and work for you. So,
all right. So lenders are lending. There haven't been any, Keaton, from your perspective. You agree with Shaune? There haven't been like giant policy changes that turn everybody upside down. How's it looking from your end?
Well, there's been lots of giant policy changes that have turned everything up and down. The readvancing rules are changing, not as they were originally worded. TD just reworked their entire rental calculation and threw everybody's good habits out the window. But overall, it seems like the general trend of lending is getting increasingly difficult, and there's no signs that really that's going to go away. And I don't think that that's bad news per se for investors, but rather just a wake-up call that what worked a decade ago, 5 years ago, doesn't work anymore, and you have to be prepared and plan ahead for financing. This may be bad for business, but one of the worst things that people can do is call me and say, "Hey, I have a moderately complex file, and here's my accepted offer." It's we do our best to help, but it's just not a good position to help someone in the middle of a live purchase rather than to have a 1, 2, 3 week head start to actually get things in place.
Yeah. That's a good point. And whenever we talk about time to do things, the conditional amount of time that's required, I mean, that's always a push. Sellers and realtors are saying anybody on their side can get these deals done in 3 or 4 days. And of course, we know that truthfully and practically speaking, it takes a decent amount of time to phone you guys up and say, or email you and say, listen, I've got something going on, and just to get it going. If we're talking, let's talk about a reasonably basic transaction. So we've got maybe a mom and pop. They've got decent jobs. They're earning a couple $100,000 a year between them, and they're looking to buy their first investment property, dip their toe in the water. They've got decent credit, and they're going to do a 20% down payment and not going to have any trouble showing that. I mean, that to my mind, who doesn't know what the intricacies are of what you guys do. I mean, I kind of know, but I don't really know. What would you say to Bill and Mary if they phone you up, Keaton, and say, okay, we're doing this? How much time do you need, Keaton, without killing everybody?
Well, it really varies. We're fortunate that we have a base where we started our career. Before I moved to Alberta, was in BC, and subject free was the name of the game. So we have a bit of an advantage in the sense that we have 8 years experience dealing with subject free being the norm, to the point that the province has mandated protections to make subject free less aggressive. So it really ranges. I have one lender, and Shaune will know who I'm talking about. They were slow for a decade, or not a decade, a year. And they're at about 30% of their normal volume. They can turn files around in 4 business hours. And then there's other lenders that are 5 to 10 to 15 business days. So the problem is, as a buyer, you might not be happy to find out you're going to spend an extra $13,000 because you've only got 3 days, when if you had 12 days, you could save money. The flip side, though, is a lot of investors misunderstand that the time it takes a lender to process a file is on top of the time it takes you to get all of the correct documentation to go to the lender. So that's why we like to front load that before you write the offer. Because if it takes 10 business days to work with TD, let's say, the problem is if it's 10 business days and it takes you 7 days to get all of your paperwork together, well, it's probably not an accepted offer. And it's guaranteed to be a stressful and last minute process. And then you're going to think, oh God, this broker must suck. But really, sorry, clients, if you show up with an accepted offer and you're not prepared and you're not organized, it's not necessarily the broker that sucks. It's your business approach as an investor.
Yeah, no, good point. So part of this is educating your clients. I think, Shaune, you kind of alluded to that. Shaune, do you have if somebody calls you up, sort of cold call, just getting introduced, they're looking to buy investment property? Do you have some standard bit of coaching that you work with them on and say, listen, all right, if you're planning to buy, doesn't matter who is going to give you a mortgage, this is what they're going to need. You need to gather together these 10 things, these 10 documents, and really don't call me back until you've got all 10, because I can't do anything. How do you handle that, Shaune?
Well, first of all, I hope it's Bill and Mary calling me, so because they're easy. So
Yeah,
I do have a template of all the docs that fit, basically any lender, and they don't apply to some people, if it's incorporated and stuff like that. But send it out and say, send me all this stuff, and surprisingly, I get a lot of responses with about half of what I asked for. Sometimes they say, well, why do they need that? My bank doesn't. I said, well, that's what I'm going to need to submit to the lender. If your bank knows you and they may have all your bank statements, so maybe they don't ask for your bank statements because they can see them. But incorporation docs and stuff like that. So I basically, it's along the lines of no docs, no talk. If you don't give me the stuff today when we're trying to pre-qualify you, what it's going to be like when you're going to go you got a live file and you want to get approved, and these things are trickling in, one at a time. That pisses off the underwriter too, because they want to see, the lender that Keegan was referring to, the big red machine there that was out of the picture for a year and came back in. I had a file. I sent it in. This was, about 6 months ago. I sent in a file Monday morning at 8:00, and I had instructions to the lawyer Tuesday at noon. So everything was done. The docs were approved and instructions were issued, and they had it by noon the next day. And there's other lenders out there that I won't name that you send it in Monday morning. The underwriter might take a look at it on Wednesday or Thursday, and then they got a list of docs, and you got to send those in, and then they got to review them. Then they always got to ask for one more document or they overlooked something or made mistakes, and it takes you 3 weeks to get something to the point where it's going to be approved, and you got to fit an appraisal and everything else in there. So it's really, when people say, "Oh, I saw this rate on the web, they're going to give me this at, pick a bank, TD's offering this great rate out there," and I said, "Well, your condition of finances is 7 days away, and TD won't even have looked at the docs by then, so you're not going to get that. So you can get, we can try and work around that, extensions and stuff like that, but more likely we're going to have to go to somebody like Scotia who's going to approve you." So I always tell people, do you want to get approved at 5.9 or declined at 5.5? Which you prefer?
Yeah.
So, you gotta know your lenders and how the file fits in with them. And some lenders like certain types of borrowers as well. Business for self there's certain lenders who are better than that. And some lenders have their own rating criteria of clients that, your credit score is important, but they look at other things, and they may pass muster at one lender, not the other, just because what they find and check. And I did a file here about 2 weeks ago, and it was gift from Dad, and he was taking the time to sign the doc, and I found out from my lender that they have some kind of database they run everybody through to make sure they're not on a list of people accused of money laundering or all that kind of stuff there. So they go pretty deep into that stuff. So if you're accused of money laundering, want to give a gift to your daughter, the file's not going to get done.
No. So folks, as you listen to this, I hope you're getting a sense of the complexity of getting approved for financing. I mean, if you've got all the credit in the world and money in the bank and cattle on the range, as my dad used to say, and you've got a great job and and a fabulous relationship with your banker that you've been with 30 years, you probably can go in and do something at the branch fairly quickly. But other than that, financing is a complex business. There's lots of lenders out there. They have different policies and different, as Shaune says, different likes and dislikes. Some they like different files better than they like other files. So that's why you should be using a mortgage broker to get your financing, and not trying to do it on your own. Remember, you don't pay for this. You don't have to pay Shaune or Keaton because the lenders pay them. So why would you not, if you need a loan, call up either of these guys and get going. Call them early, get the coaching that you need, give them the time that allows them to do a really good job for you, and don't jam them into subject-free timing, as Keaton was referring to. It's awful. It just, as an aside, as a lawyer, Shaune, I think you were saying, you gather material, you send it to the underwriter, and then some lenders are back. They always need another document and another document. I see that on my end because I get instructions. We prepare and do exactly as the lenders tell us, and we send it all in. And it's part of their portals and the process. We get emails back because we're not allowed to talk to anybody. I don't know if you get to talk to anybody on your end, but the lawyer side of things is designed that you have to go through the whatever portal you're working with, and all you can do is email. And so you send it, you've crossed all the I's and T's and dotted all the I's, and you get emails back saying, thank you for that. You didn't give us this, 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 and this. And you look and go, well, yes, we did give you exactly those this morning at 8 o'clock when we sent everything in. They never say, oh, gee, sorry. What they do say is, oh, yeah, maybe they say, yeah, you gave those, but now we need another document. We need this, we need that. We had one closing last week where on the day of closing, we had two more emails from the lender saying, oh, gee, we forgot this. Oh, gee, we forgot that. And scrambling around trying to get stuff. So time is very important, folks. That's what I'm saying. I'm not complaining. That's the way it is. You just have to work your way through difficulties. Everybody has these things. But time is our friend in this business. And try not to get rushed into doing things. Talk to guys like Shaune Keaton well ahead of time to find out what they need, and then be diligent about going through the checklists that they give you and ticking off those things and get it done in a timely way. All of it will go so much more smoothly. Now, gentlemen, you both have organizations. You're not just out there brokering away on your own. You have other organizations that allow you to work in other provinces or give better service across. Do you get, does head office have analysts who give you guys their take on what's going on with interest rates, where things are going? Do you get any of that kind of help, or do you have to kind of figure that stuff out on your own? And if you do get that kind of help and commentary from your group or your head office, what, if anything, have they been saying over the last few weeks about trends and things that are going on that people would like to know about?
My head office doesn't really, give a lot of insight on where they think rates are going. There's enough economists out there on the web giving their opinions and stuff like that. So not much from head office. So
Not much from there.
Yeah,
No.
They're more concerned about make sure you're doing everything's compliant and you're doing your files right, so they don't get slapped on the wrist from somebody. That's my take, anyways.
All right, Keaton, what about you?
So I'm going to have to do this off memory, but I think I'll be to the month. So there's been 15 times in Canada where interest rates have gone up a minimum of 1%, being at least 20% relative to the rate. So if rates are 4%, then the minimum threshold is 1% increase. If rates are 10%, then the minimum would be a 2% increase. But long story short, there's been 15 times in Canada since the 60s, rates have gone up a lot. In those 15 times, the average increasing time is 20 months on average. I believe the longest was 6 or 7 years. The shortest was a couple months. But generally speaking, it takes 20 months. And once rates hit peak, it lasts on average for 4 months. The longest off memory was 18 or 19 months that sat at the peak. The shortest was about a month. So a good thing to know is that, at least looking back, historically speaking, we should be nearing, based on averages, the end of the run up. The peak should last, if we map this over, until roughly the spring. So historical data can give us some precedents to look at, but it's important to know that you can't drive a car looking at the rear view mirror. So it is a useful tool to get a rough idea of how things may match. But the flip side is when it comes to what's driving rates up, which is ultimately inflation, and 80% of all US dollars are created in the last 3 years. Surprise, surprise, was inflation. It's important to look at what's actually happening in the market as well. So I find it useful, though, to look at kind of that historic data and see how it matches up.
I agree. I spend time looking at historical data to see where you can see the long trends of where rates were, but as far as predicting where it's going in the future, that's it. It's a guess. And if any economist told you he predicted the Bank of Canada rate to go up 4.5% or whatever it is, 4.25% over that time, he'd be lying to you. So, yeah. And when the Bank of Canada announcements come out, sometimes it's half of them are saying, the economists are saying it's going to go up, and half of them say it's not. So, I've got master's degrees and stuff from university, and their guess is as good as yours sometimes. So,
I think the secret of that industry, if you get enough guesses, someone will be right.
Yeah.
All right, let's look at a couple of questions here before we carry on. Are there multiple offers happening in the Calgary area and Edmonton? Well, they certainly are in Calgary. There certainly are multiple offers in Calgary. Anecdotally, I've heard that there are occasions where there's a great property in a great area here at a good price where there are multiple offers in Edmonton. And you guys see any of that?
Yeah, just what you said.
Yeah, just about the same. Okay, next up, Donna. Leona, how much time ahead is considered fair to you as a mortgage broker? So Leona, I think, is saying, how much time do you need? How much time would you like to get when somebody's looking to get a mortgage? Keaton, what about you?
Well, I guess the question is, do you want the option that fits your timelines or the option that fits your goals? I would, generally speaking, prefer to connect with a client at least a month before they write an offer, because often you think you'll write an offer in a month and then you write an offer in a week. So it's nice to just be prepared, and it gives us the time to actually go over things and to figure out, instead of just saying, do this, it's right. It gives us the time to understand your goals and to make suggestions and put you in a position so you can decide what's right for you. But that does take a little bit of time. So I'd say a month's kind of my sweet spot.
Yeah, it's sort of the same time frame, because if there's things they have to do, maybe they got to pay out a debt, for instance, to get the ratio in line, and they might not be able to do that if they come to you, the day before they write an offer. But if they got a month in advance, maybe can do some planning, and sometimes even more than a month is good, because there's different lenders have different rules about your down payments and how long it has to season in your account and stuff like that. And the more time you got, the more opportunity you have to get something in place that's not going to be offside with a lender.
Yeah. All right, Donna, any more? Is Edmonton's 6-month lag happening? Is that probably a reference to Calgary seems to do everything ahead of Edmonton? If that's what they're talking about, I thought that lag was 12 to 18 months, not 6 months.
I agree with you and Greg Head's book there on real estate cycle. So
yeah. So Edmonton always does seem to lag. I think it's more than 6 months, but I think looking back, Calgary's been popping along for a while. I have to look, but I'm pretty sure we should be getting close to Edmonton starting to churn up some of those price rises and more multiples, and the market just increasing here a little bit. I haven't really seen that or heard anybody talking about it, but based on the time lag, I think we should be getting pretty close.
Well, it'll be interesting to see. Historically, usually Alberta booms because Alberta booms, but this current trend up is more that the rest of Canada is struggling with certain issues that Alberta has to a lesser degree, which is affordability and vacancy and rental supply and all that fun stuff. So it'll be interesting to see if Edmonton ever bucks the trend and outperforms Calgary, as it's a less expensive city, typically with a higher vacancy.
Yeah. No, good point. Good point. Calgary has just gone through an amazing exercise down there, trying to figure out the affordability side and the homelessness side. I mean, they come at housing from all directions, culminating in a giant set of meetings last weekend that resulted in City Council, I think, on Sunday, looking at 60 recommendations and coming up with 30 chunks of policy proposal that are all supposed to do a whole bunch on the affordability and homelessness side in Calgary. So we'll have to see what that does. I think a whole bunch of zoning things. The city has 200 pieces of land that they say that they're going to make available in the right circumstance to provide as a component of improving the housing situation in Calgary. So that's kind of an aside from what we're doing, but that'll be another factor driving things along in Calgary.
Edmonton has their new zoning policies, bylaws, etc., coming out here pretty quick. You'll be able to build an apartment on our RF1 here pretty quick, the way they're going. So
yes,
You can put. I've talked to several clients who looking to put, six or eight units on a 50 by 150 lot, where it used to be maybe a fourplex was all you could get. Now you can put, connected townhomes with basement suites, and even maybe add a couple of garage suites in the back,
Mm-hmm.
and densify the neighborhood. I don't know where they're going to park, but
Yeah.
it's I got lots of clients looking at stuff like that. So it's going to make a difference, more availability, and people can do more on their own, maybe their own properties. They can add a garage suite or even a double garage with 2 suites up above. So,
And that
so
that's in
4-car
discussion now. I think we're coming up to put that bylaw into effect in January, if I recall.
I think you're right. Yeah, it's
Yeah,
coming
so
up pretty
that's-
close. Lots of people that I've talked to are excited about what's going to happen. If they're investors, maybe not so much if they live in the neighborhood and
Mhm.
park 2 blocks away. So,
Yeah. Well, the parking thing is, and I think municipalities are slowly moving over to we're not going to worry about parking, because if there isn't parking, people will take transit like we want them to. I mean, that's a driving people in the direction of transit. I think, and parking is always a big issue, but it's becoming less of an issue because the municipalities are going, we don't care about parking. Park wherever you want or don't. We don't care. Here's a place to live. You figure it out.
when I was in New York here a few years back, and we rented an Airbnb downtown, and if you drove to where your location was, you can't park your car. There's no place.
No,
So you got
there's
to
no
take
parking.
taxis or
That's the
transit.
extreme, right?
Yeah.
Yeah. That's where it gets to when things are dense and popular and everybody figures it out.
Well, it's the Alberta mentality. Everybody owns a vehicle, and maybe the wife's got one, and you got older kids. Maybe they got a vehicle. So
Hmm.
you got to have a double garage with a long driveway to handle everything. So,
Yeah. Park them in the line. More questions, Donna?
Mm-hmm.
Tony, you're on fire here. Do you guys think rates will come down because of the elections, UD and Canadian? US, I
probably
think, Tony.
U.S. and Canadian.
All right. Put on your prognosticating hats and tell us exactly what's going to happen with rates.
Well, they're going to kick Trudeau out, and the Conservatives are going to cancel a carbon tax. So that's going to make it better for everybody, make it more affordable. So I laughed at Trudeau. Trudeau wants to levy fines and stuff against the grocery stores because he put a carbon tax in that raised all the food prices. Where does that make sense?
I don't, Tony. I don't. Earlier on, we talked about economists don't know where rates are going. So, I mean, dive in if you want, laddies. But do you know where rates are going, and is it all going to happen? Is it all influenced by the elections in the U.S. and Canada?
If they drive us into a recession, rates will go down. So
yes. All right. Next question, Donna. Sid says, with CMHC MLI select changes, how are investors closing deals for who used to use private money, be lender for bridge, and then convert to CMHC improved lender? What is the way to do now? From just before you guys start, I'm going to say that I've had at least 3 fairly good-sized deals come through my office where the buyer borrower had to do exactly what Sid said because they couldn't get the MLI select approvals in place fast enough to close the deals or do what they wanted to do. So having said that, from my very small sample size, Keaton, do you have any comment on how the MLI select program is working?
I'm not a commercial broker, so nope. Finally get that one out there. We're going to stop reaching out.
All right. Keaton is not a commercial broker. Shaune?
I dabble in smaller stuff, generally private on commercial. I have a couple of commercial brokers who know what they're doing that I refer people out to them. So I had a client who was just looking for a bridge to do exactly what was said there, to go to somebody other than a CMHC mortgage because of the slow turnaround time on that, and I was looking for a private bridge loan for him because CMA or MLI Select, you can go up to like 90 to 95%. So you only need 10% down at the max, right? Well, if you go to a conventional to start, you need 25% down. So he needed that 15% difference between what is expecting from MLI Select versus the conventional lending. And just like an hour ago, he said, "Hey, MLI Select came through for me. They told me it was going to be January, but now I got approved." So he's happier than
Yeah, I'm sure he is.
And I don't know what someone just posted this, is CMHC still a 12-month wait? Well, this guy wasn't 12 months. It used to be pretty quick because there wasn't many people knew about the program and went into it. But now that it's become so popular, it just takes forever to get to an underwriter, is what I've been told. So you really gotta have a backup plan. That's my thoughts from what I'm hearing.
Yeah.
So.
And folks, if you want to talk about MLI Select, you can go back into YouTube and look at the couple of shows we did with Garth Chapman and Neil Shopsowitz, who are very big on at least they're very big on the MLI Select program. They have a big focus on that. And so there's a couple of other resources for you if you have MLI Select questions. I think it's a new enough program and there's enough demand that there's some real slowdowns in the system. And just as we said with getting Keaton and Shaune to help you, get a pro to help you. It's the same on the commercial side and maybe even more so. So it's, yeah. I mean, I had a client who was working the MLI Select stuff, and we were at the point where the lender lawyer had given us all the security documentation. We'd met with our client. We signed everything. We had everything that the lender lawyer said they needed to fund the mortgage. And the brakes got put on in the MLI Select program and the CMHC process. The amount that was going to be funded was reduced. And despite the fact that my client was this far along in the process, he went off to a private lender because his project was falling apart. So it's there. It's got lots of good points. I don't want to discourage people, but lots of good points. But talk about time, man. All right, another question, Chris Davies. Chris, how do you have time to even be here with, the rounding up all those kids of yours? Anybody can do it. Chris can. There's also some harsh new restrictions and risks when it comes to creative real estate like VTBs, AFS, and private financing. Get those grandparents involved. That's good. You know what, Chris, we're going to have you on and have a chit chat about the commercial side of things and how it appears from your commercial realtor's perspective. But I think that's a great idea for another program, because there's a lot going on, and I think people would like to hear about some of those restrictions that before they go getting all creative and thinking they found a way to do things for differently and to their advantage, and only find out the lender hates it. So that'll be for another time. Prices rising in Calgary. Is it still possible to get positive cash flow for a traditional buy and hold?
100%. Put 40% down.
Yeah.
That's good, Keaton. I mean, for a Facebook user who asked that question, I mean, it's a matter of numbers. You got to look at what you're paying, how much you're putting down, what your costs are, and what can you rent for. So, I mean, maybe you can rough cut that. It's harder in Calgary. If you're paying $550 or $600 for basic accommodation, I mean, you have to rent that for big dollars. And I know there's lots of pressure on the rental market, and rents have been going up. So it's a matter of analyzing for your property in your city, in your particular area, because real estate is local, and you got to know what your local numbers are. So Sorry,
Yeah,
we can't get better than that. Shaune.
the other thing about, can you make it work, cash flow and stuff like that, is you got to look at how the lenders look at rental income. So I've done lots of files where lender A, you can't qualify because they got different rules for rental income and how they apply it versus lender B, and you might qualify at B but not at A. So it's another part of looking at when you're doing investment mortgages. Where do you, number one, where do you put your clients for their first investment mortgage? Is it somebody who's a little tougher to qualify and doesn't do very many doors that you can maybe get them approved at that lender for the first one, but you wouldn't get the second one. So then you go to ones that maybe are a little more relaxed on some of the rules or rental income, so you can get that third or fourth rental with them, but you would never get it with somebody else. So the order of how you put your mortgages sometimes comes into play there as well. So
I know those lenders. Now, Chris Davies has another comment. Are lenders still freaked out by condo complexes that have frequent special assessments versus low condo fees or high condo fees? Well, I'm going to leave that to our talented duo here because I don't know what lenders think about that. Keaton, any comment there?
Yeah, generally speaking, it's the mortgage insurers that care more. But at the end of the day, it's important to remember that when you look at a condo or a townhouse, what you see is like the paint on a car. And what you really care about when you buy a car is not the interior and the paint, but rather the mileage, accident history, maintenance records. And that's what the strata documents are. As an investor, one of your biggest risks, or even as a homeowner, is if you own in a complex that has, let's say, on average, $15,000 a year in special levies. They'll be broken up, but let's just say on average. Even if you can afford them, if the majority of owners in your building can't, your strata is going to hit major issues. You're going to see units start to get fire saled. The funding mechanisms of the stratas will typically run into issues. They will have to start borrowing money. And there is a death cycle of stratas. So often it's very rare we'll see a 100-year-old townhouse complex as an example, because there tends to be a lifespan for wood framed apartment buildings, even concrete high rises and townhouse complexes. Eventually, the cost of maintaining them is typically higher than the cost of just losing money to sell to a developer who's going to just destroy it and build something bigger and better. So they still are freaked out because there is a death cycle that happens, a spiral with complexes, and it's bad news for everybody unless you have the developer buying it.
Yeah.
well, I would say the question might say, are borrowers freaked out by condo complexes and have those issues there? So I got one of my condo complex, 1978, wood frame building, just like we see all over Edmonton, 2 stories, 3 beds up, and the bath on the main and the bath upstairs and stuff, and 1,200 square feet. Those are all over the place. And 1978, well, that's, 45, 50 years. So the lifespan of some of the components, like the siding and everything else that goes on there and the roofs and stuff, it's, if you don't have a solid reserve fund and collecting that over time, then you're going to run into issues. And we got a special assessment coming up on that property. So it's driving down the price of the properties once it's all done. And it's, like new, I'm sure the prices are going to go up again, maybe as much as what you paid for your special assessment. But when you got, retired folks living in this complex, they got to come up with, a lot more money every month or on a loan or whatever. It's tough on them. And I see a few comments on Barry's page and other pages, people are asking about what do I need to see in condo docs. And I say the first thing you need to do if you're buying anything with a condo complex, you got to get it off to a document specialist who can understand and explain it to you. So
Yeah.
Condo boards are notorious for having somebody in there on the executive and the board chair and stuff who they don't want any fees to go up, so they don't raise condo fees because it's coming out of their pockets. So eventually the shit hits the fan basically, and you got to do things, and you don't have any money for it. So that's lenders understand
the death cycle for sure. Condo boards are not, and managers are often not nearly rigorous enough about explaining to people that they can take care of it now or they can lose it all later. You cannot avoid it. Everything takes money and action to maintain. It doesn't matter whether it's a house or a duplex or a condo complex, and you just can't avoid it. You can't listen to folks who say they don't want fees raised. And if you're in a complex like that, you should probably be looking to exit, because that will be disaster for you somewhere down the road. And here's a question I have had a couple of times in my career. People look to purchase a condo unit and have the mortgage broker say to me, you know what, this complex is on the CMHC's blacklist. They won't lend in this complex. Do you guys have comment on that? Is there such a thing as a CMHC or insurer blacklist for various condominium complexes?
There is, but they will never tell you what's on it. They'll only tell you if you make an application and list a complex. They'll decline it, but you'll never find
I have
out.
a very differing experience. I call the insurers on every condo in strata. CMHC won't tell you anything, but if you call Canada Guarantee and Sagen, they will tell you exactly what's going on with the building, their internal notes, last time they funded it, and we use that for every time a client's thinking of writing, or if someone wants to sell, as a way just to do extra due diligence.
They won't tell you all of complexes are on the list.
No, they won't give you a master list, but they will answer if you call specifically on a condo.
Yeah, they'll tell you if there's something going on, you can't get insurance for that one or something. Tell you what the issues are. So I meant there's no list out there that they'll give you.
There is a lender that doesn't review strata docs, though. So there are loopholes, but really you don't want to buy something that's crap. You really don't.
You really don't. So, folks, if you're buying a condo, get those documents reviewed, and read the report from the company that did the reviewing for you, so you can get a really good sense of whether or not this is a well-managed, well-funded, we understand what's going on condo corp, or is it somebody who's putting off the assessments and kowtowing to members and just putting off the day of reckoning. That's so important to have that analysis. All right, what does Sid say?
It costs about $350 or $400 to get your docs reviewed, and they're really good, experienced doc reviewers. They know all the condo complexes, in their backyard. And I've had a couple of times where I've talked to my person there, and she says, "I'm going to save you $350. You don't want to own a property in that complex."
Yeah. Well, I mean, that's what I hope they would say, because that would be, I mean, that's the answer. They see the name and they go, okay, I know what the answer is. Like, I don't have to look. So you'd hope that more of them would step up and do that, because I mean, that would be a fair thing to do. Donna, are there more questions? Sid, this time we're going to look at yours. Are credit unions more favorable with calculation of rental income from other rental properties you own for a new purchase of a residential house in a personal name? Well, Keaton, what do you think about that?
Sometimes. So the nice thing is credit unions are provincially regulated, so they have a different set of rules. You probably didn't know this, but credit unions don't have to follow a stress test generally. So there's all sorts of things they can do, but the problem is that some of their policies just suck. Some of them don't do 30-year amortizations. They premium them heavy. They have all sorts of quirky rules. So it is very case by case, but the biggest risk you run with credit unions is that they run out of money. So you'll notice that occasionally they'll have great rates, and sometimes they'll have absolutely awful rates. Now, the rates are an obvious indicator if they're out of money or not, but sometimes they won't admit it, and your file drags and drags and drags, and they basically have a top-down mandate that, hey, we're out of money, stop lending. But they won't tell you that because it's embarrassing in the bank world.
Yeah.
Yeah, so like Keaton says, they're kind of in the middle of the pack. There's lenders, banks out there that have better rental income calculations, and some have worse than the credit union. So The one thing about a credit union is when you get the rate, and depending, like service or something, you always get a rebate back at the end of the year based on the value of the mortgage and stuff like that. So that can have a small impact on the money you get back from them. So if they're competing on rates with a credit union and it's the same rate as the bank at the end of the year, you might end up a little bit better off with a credit union. So just because the rebates, that's my experience with service anyways.
One of the things I think is important to know as well, and we see this a lot in BC, is you may have a credit union that, let's just say, utilizes, and there's a difference between what 100% add to income calculation is worse than a 50% rental offset, as an example. So you have to understand the different calculations. But for simplicity's sake, we'll say utilization. How much rent do they actually impact the file with? If they max your max ratios at 42% of your income, and another lender will go to 49% of your income and they use slightly less rent, the lender that uses less rent may have more buying power. So it's just important to not get obsessed on any one detail unless you're do what Shaune or I do, because we actually know the different layers of it and how it spins out. But sometimes using more rent's not better if you're giving up something else. As an example, a ratio extension to use 49% of your income instead of 42 or whatever it may be.
Yeah, even insurers have different ratios for their CMHC is tougher than the other two sometimes. So
now, speaking of insurers and CMHC, we haven't ever really chatted very much about buying investment properties in, buying a townhouse and getting an insured mortgage. Is that still a product that they offer, 85 or 90% financing, or is that gone?
you got to
Or
live
nobody
in it.
uses it?
It's got to be owner occupied.
Got to be owner occupied. Okay, so that's not a factor
There's
anymore.
there's a caveat on you can switch. You can turn a former owner occupied into a rental. And if it's got if it's got insurance on it still, like you've never refinanced it or done anything to that mortgage, you can get the insured rates when you renew. You should be able to get the insured rates. And there's a couple lenders out there that you can switch a property from one lender to another, and these lenders will give you insured rates on a rental. So, but it has to be formerly owner occupied, and it had to be an insured mortgage. So there's a couple out there that do that. So if you're not liking the answer you're getting from your bank on a property you used to own as an owner occupied and it's a rental, call your mortgage broker, because there's very few institutions allow that, and none of them are where the public can go straight to them. So you have to be through a mortgage broker. So,
Gotcha.
yeah, doing one of those right now. So it's
Okay.
save almost the whole point on your rental interest rate.
We've got one at Fort McMurray right now, and the difference between RBC and the lender was 0.9%, which I would normally say is unheard of, but it does make a difference.
0.9. Wow. Man, oh man.
RBC is the higher rate.
Yeah. And they want a variable, so they get prime -1 versus like prime.
Well, mine's also an RBC mortgage that they're not dealing on. They wouldn't even match the rate that the bank was offering RBC. So.
We've noticed a huge opportunity for what are called insurable mortgages, which is when you meet the insurer guidelines, but you have not paid the insurance premium. And the monoline lenders, which are A lenders that are typically funded by the banks, so what Shaune's been referring to, in the insurable bandwidth right now, they're blowing the banks out of the water just because they've got different funding mechanisms and they operate in a slightly different way. And we're finding a lot of really easy business from the mortgage brokering side where we can kind of turn our brain off and we just win by rate by default, which is pretty rare.
That's very interesting. That's really interesting. So if folks can meet what it would take to qualify for an insured mortgage, but they're actually not getting an insured mortgage, you can access these fab rates. Is that what you're saying there, Keaton?
Yeah.
Yeah. So insurable means you put 20% down, but you take a 25-year amortization and follow the guidelines and the ratios, everything else. So the banks do what's called a back end insurer on it. So they protect themselves for a very small premium.
And folks, are you getting why you should be using a mortgage broker? I mean, I'm a real estate lawyer. I do this stuff all day long, every day. I didn't know that. There's lots of stuff that went on tonight that I kind of knew, but I didn't really know. This is why you should be using a mortgage broker for every darn mortgage. You should be getting your portfolio reviewed. You should be using these guys to plan and talk to them about your goals and aspirations and where you're heading with real estate, because they can point you in the right direction and have it be the most economical forward bit of success that you can possibly have. So do not be trying to do this on your own at home, as they say. Don't try this at home. Talk to these guys.
Remember
Get
that
coaching.
the loan officers, or whatever you want to call them at the banks, work for the bank. So their goal is to put as much money in the bank's pocket as they can.
Yes.
So our job is to put as much money in your pocket as you can. So.
And those bank people are very nice about it, but their bank head offices are driving their employees to do various things that increase the bank's profit. I mean, it's business. I don't blame them for doing that, but your bank rep is not necessarily on your side. I guess that's what we're saying. You're better off talking to
I'm
Keaton.
sure every mortgage broker has at least one story where the client went into the bank to get a draft for a down payment on a property, and the tellers, they're trained, what's the money for? Oh, I'm buying a property. Oh, really? Where are you getting your mortgage? Well, we can help you out. Maybe we can beat that rate and stuff. And you get a deal pulled out from under you at the 11th hour because the bank scooped you.
Yeah.
I know I've had
the biggest frustration with the mobile specialist side, where they're licensed under the Banking Act, so they're just employees and they take a course through RBC or whatever, and that's it, is that often they're trained to promise first, deliver second. Whereas I promise you call Shaune or I, there'll be a lot of questions before you get any real answers, because it's just become such a convoluted industry. And I think transparency and trust is more important than the appearance of an easy process, because the reality is it'll be what it'll be. But often we come across a lot of, my banker, I'm going to go with him. He said it's going to be super easy, no problem. He's going to give me this amazing rate, blah, blah, blah. And 3 weeks later, they come back and they're like, you were right. Wasn't what they said.
I had a call like that this morning. My bank said they could do my mortgage, no problem. And when I went to get it, their rules prevented. This one was about, had some leases in a company name, but it was co-signed by him, and the bank wouldn't offset those leases and was stopped him from qualifying. So,
all right, Tess, thanks for that comment. Bank reps are never on your side. Quotes Barry. I don't want to be as harsh as that. I know a number of bank reps that I think are hardworking men and women who understand what's going on and do their very best. And I've helped a lot of people, but that's a general comment. I don't want to tar the folks I know that I work with that I think do a pretty good job.
Well, here's a real comment to say for about Barry. The difference between a bank rep and a broker is, if a bank rep does something wrong and negligent, malicious, their worst case, typically speaking, outside of full-blown criminal fraud, is they lose their job and they go from one bank to the next. If Shaune and I do something wrong, give you bad advice, get you in trouble, we are going to spend 4 years in court getting sued. And there's a very big difference between Shaune and I as a fiduciary for our clients, which means we have a legal obligation for your best interest and responsibility to deliver that, versus someone who's licensed under the Banking Act, and their worst case is, okay, well, RBC's got 75 lawyers on their legal team and you are welcome to sue RBC. Good luck.
Yeah.
There's just a big difference in the responsibilities in the relationship.
yeah. We got to send sometimes hundreds of pages into our compliance team for a file to
Yes.
show all the due diligence and everything else that we did. So
you alluded to that, Shaune, at the beginning, that you might not be getting a whole bunch of commentary from head office, but they are on you about the compliance side of things and making sure that you are living up to your fiduciary obligations and providing the kind of service that you're supposed to. All right,
we have
gents.
a secret. We are our own head office.
There you go. Gents, it's been a pleasure having you on. Any last gems that you want to throw out there before we let you go off into the sunshine.
Get pre-approved or have a conversation with your mortgage broker, because your second call will be to a realtor, and the first thing they should ask you is, are you pre-approved for how much?
Yeah. Say it again.
Never. Realtors don't like to work with clients who aren't pre-approved for the price of the property. I always send my clients a list that says, for this amount of property you want to buy, here's how much rent you got to get to qualify for your mortgage. They can go shopping and know that they can qualify for that mortgage, unless there's some skeletons in the closet they haven't told me about, of course.
I'm sure that never happens.
Never.
All right. Keaton, any last words from you?
Sure, I'll have a shameless plug. I wrote an article today that I posted, and it's on improving the cash flow of rental properties. And I wrote it from the perspective of buying and how to plan ahead. But for anybody who owns rentals or even their own home and you're renewing, the concept still applies for being able to stretch and lower your payments. So
Okay.
if you want to check that out, you can.
Check that out. And where would folks find that? Just on your Facebook page, perhaps, or
My Facebook page. I don't know if Donna let it into the group, but it's all over Facebook.
Yeah, it's in our group.
in the group? Okay. All right, guys. Well, thank you very much. It's always illuminating. I know sometimes we get into a bit of the technical side of things, but technical financial details are ultra, ultra, ultra important. So, folks, we'll say thanks to Shaune. We'll say thanks to Keaton. And Donna, are we doing a draw, or is it you're
In
going
the
to take care?
morning.
Do a draw in the
We'll do
morning.
the draw
We're giving
and
away a
then-
jar of jam for somebody who made a comment. Donna will take care of that. We'll make sure we've been in jam making mode. We've done a whole whack of stuff. So Donna will take care of that. You'll hear about it soon. So thanks, everyone. And we'll see you next week. Or
When are you
will we?
going
Hold on.
overseas?
No,
When are you
just a
going
second.
overseas?
I'm off to Europe. You won't see me next week. Donna, when are we back?
October something.
So probably the second week of October, but we may have focus group doing things. Donna will update everybody on whether or not there'll be a Monday main event while we're away in Europe, where I'm playing 5 games of hockey, visiting 5 countries, and I think drinking a lot of beer. That's what I'm going to be doing. Thanks, everyone. Good night.